How did they make anything from a MOASS situation? Like, MOASS doesn't benefit GameStop. Here, that's doing. Let's go out here to the daily on GameStop. So there's a few things that this share offering did right here. First of all, it halted upward momentum, and it gave time to cover, or it gave shares to cover the gamma exposure from the run up into the roll date. They delayed earnings, announcing earnings until I think it was right around here, and they announced earnings on the roll date, which was very odd. Um, like usually companies announce their earnings well in advance, and GameStop has delayed announcing their earnings to like almost the end of the quarter. Um, then they sold at a very, very fast rate, right, which drove the price down. Which meant that when it got rebalanced in these ETFs, it wasn't weighted as heavily. So we see all this ETF rebalancing that occurred after. So the share offering ended somewhere around here. And these are all the ETF rebalances. Now, had this share offering not occurred and GameStop's price had gone up, these ETFs would have had to have bought shares, which would have created even more positive pressure, right? So so not only did it like halt the momentum in its tracks, it also meant that the ETFs could balance GameStop at a much lower price. So it's not weighted as heavily in those indices. So yeah, it was a real kick in the balls. Nope. Is it a good thing or a bad thing that it's not as heavily weighted? Mm, that's hard to say. Like if it's more heavily weighted, then like it's probably easier to short it with ETFs. But also the positive price action would have driven our price through the roof. So I guess I mean for us a bad thing. Maybe clip that. Yeah,